What's up everyone, and welcome back to Explain the Charts. Today is November 2nd, 2025, and we are doing a deep dive into Litecoin, ticker LTCUSD. There has been a massive amount of news and volatility recently, centered around the launch of the very first spot Litecoin ETF in the United States. The Canary Capital Litecoin ETF, ticker LTCC, officially started trading on the Nasdaq on October 28th, sparking a flurry of predictions and price action. Initial reports showed fairly modest inflows in its first week, pulling in about $1.65 million in net assets, which pales in comparison to the recent Solana or Hedera ETF launches. This has led some to question the immediate impact, but bullish narratives remain strong, citing Litecoin's growing privacy features with MWB and a significant increase in on-chain transaction volume. Analysts have thrown out some big targets, ranging from $135 to $150 in the short term, with some even eyeing $300 by early 2026. However, there's also caution in the air, with some suggesting the initial ETF excitement was a sell the news event. Now, let's pull up the charts and see how this has all played out and what we can expect next. Here on the daily chart, we can see the broader story of the last several months. After a period of consolidation, mostly between $60 and $80 during the summer, we saw a dramatic event on October 10th. The price plummeted from a high of nearly $136 all the way down to the mid-$50s in a single day, a massive 47% crash noted by several analysts. However, it quickly found a bottom and began a steady recovery, forming a clear higher low around October 17th. This recovery intensified in the latter half of October, which was clearly driven by the rumor hype leading up to the ETF approval. The price rallied strongly, breaking through multiple resistance levels as anticipation built. The climax of this rally occurred right around the ETF launch date of October 28th, where the price wicked up to nearly $107. But, true to a classic sell the news scenario, it was immediately rejected from that level. In the 2 days that followed, the price fell sharply by over 15%, finding a bottom around the $90 mark on October 30th. But the story took another turn just yesterday on November 1st. Let's switch to the 1-hour chart and zoom in on this recent action. After trading sideways for a day, we saw an explosive move upwards, starting in the early UTC hours of November 1st. The price surged from a base around $95 all the way up to close the day above $101. This move correlates perfectly with a fresh wave of news articles that hit on November 1st, reaffirming the ETF launch and pushing those bullish price targets, like $150 back into the spotlight. This suggests that while the initial launch was a sell the news event, the underlying bullish sentiment is still very much present and is now trying to regain control. Now, let's go back to the daily chart to discuss the critical levels we need to be watching right now. The most important zone is the area between roughly $100 and $104. This area represents a major psychological level at $100 and a technical resistance zone that has previously capped the price, as we saw on October 28th. A sustained daily close above $104 would be a very strong bullish signal, turning this formidable resistance into new support. If that happens, the first major upside target would be the high from the October 10th crash, right around $135. Beyond that, we would start looking at the analyst targets of $140 and $150. To the downside, our first key support level is now at the $95 to $96 area, which was the resistance that was just broken yesterday. Holding this level on any pullback would be a sign of strength. If we lose $95, the next significant support comes in around the recent low of $90. A break below $90 would be a bearish development, potentially opening the door to a retest of the strong accumulation zone from 2024, down in the $80 to $60 range. Some longer-term bearish analyses have even pointed to a potential drop to $72 if this rally fails decisively. So, what is the trade plan and what are the reasons to be bullish or bearish? The bullish case is straightforward. The ETF is now live, bringing new legitimacy and potential inflows. Fundamentals like the MWB privacy upgrades and strong on-chain activity provide a solid foundation for growth. Technically, if Litecoin can break and hold above the $104 resistance with strong volume, it would signal a continuation of the uptrend. Traders looking to go long might wait for a confirmed breakout above $104 or look for a successful retest of the $100 or $96 level as support. The bearish case hinges on a rejection from this current resistance zone. If the price fails to push past $104 and falls back below $100, it could signal that this recent pump was a liquidity grab before another move down. The modest ETF inflows so far could also fuel this bearish narrative, suggesting the immediate demand isn't as high as the hype suggested. Short-term traders might see a rejection from this area as an opportunity to target the $96 and $90 support levels. Long-term, the trend remains bullish as long as we continue making higher lows above the October 17th bottom. To quickly recap the key levels, immediate resistance is the $103 to $104 zone. Above that, we look to $115 and then the major target at $135. Key support sits at $100, followed by $96, and then the more critical level at $90. My unbiased prediction is that we will see continued volatility around this $100 mark for a few days. I'd place a 60% probability on an eventual break above $104, fueled by the broader positive market narrative around altcoin ETFs. This likelihood would increase significantly if we see a spike in trading volume accompanying the move. There is a 40% probability that this level will hold as resistance, leading to a pullback to test the $96 support zone. The key thing to watch in the coming week is whether the daily candles can consistently close above $100. That will tell us if the bulls have truly taken back control. And that's our in-depth analysis of Litecoin. Let us know your price targets and thoughts in the comments below. Finally, a quick disclaimer. This video is for informational purposes only and is not financial advice. Cryptocurrency markets are highly volatile, and you should always do your own research before making any investment decisions. Thanks for tuning in to Explain the Charts, and be sure to like and subscribe for more content.